It's Thursday, November 2nd, 2023. A lot to talk about today. Dow Jones, huge rally today, up 564 points. NASDAQ up 232 points. Now, what was this all based on? It was based on nothing more than the hope and belief that the Fed is done raising rates. The market truly believes that this is it, that Fed is not going to raise rates this year. It believes it's not going to raise rates next year. All this based on hope. Now, my question is, and please comment down below, my question is, how in the world is the Fed going to get back to 2% if it has paused rates for good? Absolutely impossible. And what is even more shocking is just watching the 10-year yield down 30 basis points in literally a day. Absolutely shocking. And another question, please feel free to comment down below, is this. What happens when the Fed begins to stop buying all this debt? Because we know who's buying all this debt. We know who's in the bond market buying right now. It's the Fed. And at some point, the Fed is not going to be buying up every bond. And when the Fed comes to a point where it is no longer buying this debt, we're gonna see huge trouble. I believe what we're seeing today, it's almost comical, but it's not. This is a sucker's rally. And the sad thing is there's people out there who have absolutely no savings. They're working 2, maybe 3 jobs. They're paycheck to paycheck, barely getting by, really struggling. And then they turn on the television and these analysts, economists, financial TV hosts are on TV all day just talking about how strong the consumer is, how strong the economy is, how incredible the stock market is doing. And then you see a rally of nearly 600 points today, and you think everything is okay, even though you have no net worth, no savings, working 2 to 3 jobs, barely getting by, paycheck to paycheck. And I guess if you tell people a lie enough times, even though they're completely broke and they're working 3 jobs, they believe everything is good. They believe the economy's doing well. Again, this is all to me a big facade and a giant suckers rally where people are going to go in and buy up even more, and they're going to pull more people in. And at some point, they will pull the rug out from everybody. And anybody in these markets is taking, in my opinion right now, a huge, huge risk. I mean, think about, just take a look at your economy, your local economy. How many people are struggling? Household debt, credit card debt, auto debt, student loan debt, 2, 3 jobs they're working. They can't get ahead. And yet we're being told every day on the television how resilient the consumer is and how great the economy is doing. I mean, again, this is almost comical watching what took place today. All based, I mean, can you believe that just hope, nothing fundamental, just the belief and hope that the Fed's done raising rates, and that's enough to get the Dow Jones up almost 600 points today. It's really, it's a really sad state of affairs. Now, another article I was reading today, CNBC, Vanguard CIO, Greg Davis, Fed could hike interest rates 2 more times. He believes the Fed is not done raising. We could see, he says, the next rate hike in December. And I do believe we're going to get one more this year, and we're going to get more next year. But again, somebody explains to me, how are we going to get back to 2% without raising more? Common sense would just tell you that the Fed is going to have to raise more. This inflation is extremely sticky. Every time you go to the store, I don't need to tell anybody out there that you're continuing to pay a lot more than you were a couple years ago, or a year ago even. And I don't see inflation going away. In fact, I think we're going to see more as the system is going to continue to print more money to support not 1, but 2 wars, potentially 3 wars by next year. And so how in the world do we get back to 2%? How in the world does inflation go back to 2% when we're printing up all this money? You look at the astronomical amount of billions upon billions of dollars going to other countries. I don't see it happening. The Treasury is going to need another $1.5 trillion by the first quarter of next year. Jamie Dimon says businesses should be prepared for interest rates to go higher in case it happens. He says, I suspect the Fed may not be done. Inflation is a little stickier than people think. We'll see, he says. I think Jamie Dimon, just as he called it many, many months ago, that the consumer would be broke by the end of summer, which they are now broke, and he'll be right again here with regards to interest rates. They're going up. And I think you don't need a PhD in business to connect the dots here, that there's just too much debt. There's too much inflation. We're not going to get anywhere near 2% by just holding where we're at right now. And even if the Fed doesn't raise and they just hold right where we're at right now, higher for longer, we're gonna see big trouble in the U.S. economy with small businesses and the average consumer. But at some point, the Fed has got to protect the dollar. It's got to fight inflation. It's got to protect the U.S. economy, and it cannot do that if it's just going to sit and hold rates at 5.25%, 5.5%. Inflation is much too high. The Fed is going to have to get much more aggressive, and the Fed at some point is going to have to come out and demand that the U.S. government stop all of this reckless spending, and the Fed is going to have to stop buying all of this debt. There's just so many games going on behind the scenes. How in the world is this ever going to get resolved when you have the Fed buying up all the debt, the U.S. government spending all of this money, trillions of dollars, while the Federal Reserve is raising rates? It just seems absolutely non-productive. It's continuing to cause a huge disaster. I think the only way it gets resolved is they're going to have to raise rates aggressively. The U.S. government has got to stop spending money on all of this stuff, the wars, all of this free money going all over the country, all over the world. It's got to come to an end. They're just spending so out of control. And then you have the Fed in these markets buying up the debt. It's not going to get resolved. You need to prepare for some very, very disastrous times. Starbucks stock rises 10% as U.S. customers buy into pricier drinks. Now, I find this interesting that people are spending $8, $9 for a latte, while they tell us 62% of people, workers in this country, are living paycheck to paycheck. I believe it's at least 80%, but you have anywhere from 62 to 80% of this country living paycheck to paycheck, and people spending $8, $9, $10 on coffee. Fortune.com, 4 in 10 Americans can't cover a $400 expense. We have over $1 trillion in credit card debt now. $1.7 trillion in student loan, 1.5, 1.6 in auto loan debt. And yet people cannot stop spending. They're going to continue to go out and drop $8, $9, $10 on coffees. No control, ladies and gentlemen. The people are as bad as the government. Nobody can stop spending. And then when we hit tragic times, people will wonder why they did not protect themselves, why they did not prepare, because they can't cut things out of their lives. They can't make sacrifices. They can't do without a $10 coffee. They can't do without a $25 cocktail. They can't do without going out to dinner and having a $100 steak. They can't do without driving that certain car, living in that certain zip code. The smart people right now are cutting out everything they don't need, and they're building up a war chest of capital to protect themselves. They're buying assets, they're buying real things, they're cutting things out, and they're making sacrifices. It's what I've been doing for a number of years, and I know a lot of you have been doing the same thing. The writing is on the wall. Just look and read the data, ladies and gentlemen. Target CEO says shoppers are pulling back even on groceries. Target CEO Brian Cornell, he says, but even in food and beverage categories over the last few quarters, the number of items that consumers are buying has been declining. The retailer cut its full year sales and profit expectations in August. Now, here's some more news today. And, people will say, oh, you're just repeating the same thing. This whole stack of news right here is 24 hours or less. This is all very, very recent news and data. Panera to lay off more than 300 corporate employees ahead of IPO. This on Fox Business. That's 17% of their corporate employees. You know, I was talking to a friend of mine the other day, my good friend Marshall, and he's living in Arizona. He came out here a couple days ago, and he made a stop at a McDonald's on the way in, and he said it was completely dead. And I was reading some of these forums regarding McDonald's today, and so many people are reporting the same thing throughout the country, that they go into a McDonald's, it's completely dead. Nobody's there. But you look at the average cost now. Nothing's $1 at McDonald's. You know, the Big Mac combo, I think it was, what was it, Connecticut, $18. Out here, I think it's about $12.68, almost $13 plus tax. And so a place where, you know, you used to be able to eat for $4 or $5 and have lunch when it was actually real food and you got a real portion, you got real service, the restaurants were clean, those days are over. Now you just get bad food, bad service, extremely expensive. You don't know what's in the food. I think the food is probably at this point extremely dangerous. The portions are much smaller. Nobody wants to work there, even though they're making, you know, 16, 18, 20. Here in California, they're going to be making $20 an hour, yet still people don't want to work there. Stay away from these places. You're better off, you know, if you're going to need to eat lunch somewhere, pack a lunch. Buy something. You can buy higher quality food, pack it yourself, put it in one of those brown bags or a lunch box and do it yourself. I mean, this stuff is poison. Stay away from it. But we're seeing more layoffs. And so I bring this up again because we look at McDonald's as, you know, cheap fast food. It might be fast food, but there's no more cheap. These places are fast food. You have no idea what's in them, but they're no longer cheap. And so it's shocking to see what's happening, that people now can't even afford to go out for fast food. It's getting so expensive. Airbnb misses fourth quarter outlook, citing travel volatility. The post-health crisis travel boom is now running out of steam. Airbnb gave a disappointing outlook for the fourth quarter, citing greater volatility in the economic environment that it expects will slow demand for travel after a record summer season. You know, again, Jamie Dimon was right. He said the money would run out by the end of summer. And here we are now. Summer's over. Airbnb now is not seeing the demand. The steam is running out. People have spent basically everything that they had from the health crisis period with all the free money. People didn't save it. They didn't buy assets with it. They bought a good time. They went out. They bought toys. They bought Airbnb weekend vacations. They ate well at the restaurants. They treated themselves, but none of them really prepared. A very, very small amount of people prepared for what is coming. The economiccollapse.com, living paycheck to paycheck has become the main financial lifestyle for U.S. consumers. And quick note, while the consumer is living paycheck to paycheck, one thing they better be very weary of is what's happening in the Middle East. Once a pipeline gets blown up in the Middle East, where, you know, the Middle East, 31% of our oil is coming from the Middle East. What happens when a pipeline blows up? If you think gas prices are expensive now, wait till something gets blown up. As of September, 62% of adults said they're living paycheck to paycheck. Again, I believe that number is closer to 80%. Living paycheck to paycheck only works if those paychecks keep coming in. Question, what happens if the average person misses one paycheck out of the month? They're in big trouble. Once those paychecks stop, they're at risk of losing everything. People don't need to be out of work or miss 4 or 5 paychecks in a month. Many people, if they miss one, they're in big, big trouble. That's how fragile all this is. But yet we'll turn on the television today and they're going to tell us how great the stock market's doing and that the consumer's extremely resilient and they're out there spending money. They're not telling you that they're using one of their 589 million credit cards in order to do it. But this thing is on borrowed time and you can just tell. Living paycheck to paycheck is the new financial lifestyle among U.S. consumers, ladies and gentlemen. And this is setting people up for very, very tough times. This is setting people up to lose. Again, you miss one paycheck, two paychecks. I mean, I think there's a lot of people in this country, whether they want to admit it or not, they miss 2 or 3 paychecks, they're homeless. If they don't have a family to fall back on, if they don't have a plan, they're homeless. They're homeless. Wall Street Journal. The economy is great. Why are Americans in such a rotten mood? Please comment down below. Have you noticed this? I've noticed this for quite a while. People are very short-tempered. They're angry. They're impolite. They drive like idiots. Nobody can wait. People will cut in line. People will cut through a drive-through. People will walk right in front of you. Nobody really has any manners at this point. Everybody is just for themselves, right? And people, you can see it on their faces. Many people look like they're in trouble. Many people angry. Many people just short-fused. Many people just have that look of defeat already. And we're just in the beginning stages of this, ladies and gentlemen. This thing is going to play out for years. 60% of Americans feel behind on emergency savings. A sunny day fund can help. This is why I believe that it is already too late for so many people. And I hate to say that, but if 60% of Americans feel behind already, and this number is probably very, very conservative, what happens if we began to see things crashing a couple weeks from now or a couple months from now? What are people going to do? People are already broke. They've already spent all the free money. The country is broke. This country is broke, yet we are financing wars all over the world. We're giving money to countries all over the world, and we're broke. And that is going to continue to rob your children, your grandchildren. It's going to continue to cause more inflation, devalue the US dollar. These deficits, these debts, they're not going away. They're just getting bigger and more out of control. And everybody here, including you, myself, your children, your grandchildren, everybody is going to pay a price. CNBC, adjustable rate mortgage demand jumps nearly 10% as buyers struggle to afford housing market. Applications for a mortgage to purchase a home are down 22% year over year. Adjustable rate mortgage loans increased almost 10% last week, the highest in nearly a year. More people taking on risk. I think this is the worst possible time to be taking on risk. This is, in my opinion, just me thinking out loud here. Let me know what you think, but I think this is a terrible time to be gambling. This is a time to hunker down, build up the capital, get the debts paid off, not be taking risk like this. Adjustable rate mortgages. I mean, I guess people didn't learn their lesson back in 2008. And what's really astonishing is just people I know, not all, but there's a handful of people I know that are committing the same mistakes that they were committing back before the 2008 crisis. They're living just like they were, tons of debt, taking tons of risk, believing that it could never happen again. That was just a once-in-a-lifetime occurrence. Could never happen again. And here they are doing the same thing again. Many people, multiple short-term rentals, 3, 4, 5, 6, 7 short-term rentals, believing that nothing could ever go wrong. And these people are so severely leveraged. Multiple homes. And many of these people are paycheck to paycheck to paycheck. They depend on those homes being rented out every weekend, and now it's not happening. These people are going to learn another devastating lesson, one that they learned back in 2008, but forgot very, very quickly. Pay attention, ladies and gentlemen. Pay attention. Too many people have gotten complacent way too quickly. And this is, again, is not the time to be taking chances or risks. This is the time to be paying the debts down, positioning yourself to be in a very, very good place when this thing does crash, that you're not drowning in debt, that you can actually take advantage of what's happening and not let this take advantage of you. I'm going to leave it there today. Comment down below. Let me know about anything you're thinking about, any of this data. And what do you think about the Dow, the market being up 564 points today based on absolutely nothing other than the hope and faith and delusion that the Fed is done raising rates? I don't get it. It's just, I guess, something that maybe I just cannot understand, that there's absolutely no fundamentals taking place. That, again, this is just hope. That now hope is controlling the markets and manipulating the markets. Just hope. Nothing about facts, nothing about fundamentals. It's all hope now controlling the market. Again, read some of the data. Look at some of the statistics I just read off to you today. It has nothing to do with the market. The market just cares about what the Fed is going to do. That's all the markets think about now. That's all the markets are concerned about, is what the Fed is going to do. The markets are hoping and hoping and hoping that the Fed is going to no longer raise rates, and hoping the next hope will be that they're going to reverse course and begin to lower rates, and the market will be glorious and going up based on the hope that the Fed is going to lower rates. So while the television continues to tell us and the markets continue to tell us everything's okay, I completely disagree. I think that the average person is in very, very big trouble. I think the U.S. economy is in huge trouble. And I believe that these debts and these deficits are going to cause absolutely catastrophic events right here in America. And we can talk about the blowback from what's happening in the Middle East and possible retaliation. We had the head of the FBI come out, what was it, yesterday or the day before, talking about now certain groups in this country and the potential and possibility of retaliation right here in America. What do you think that would do to markets if we begin to see retaliation here? Comment down below. Have a good day. Stay safe. God bless.